Udesh, you were just appointed to this position coming from the derivatives marketplace CME Group. You spent 16 years at CME. You posted on LinkedIn that you started paying attention to Kalshi back in 2024 during the elections. What struck you then, and why at the end of the post you say, "I've never felt this energized in a long time." What struck you about this company?
Tim, thanks for having me on the show. I think as you said, I've been at CME. I was at CME for 16 years. I joined CME at the onset of the Dodd-Frank post-clearing mandates. And now, looking ahead 16 years, I think I see the same excitement in the financial industry with prediction markets, with the migration to tokens, with cloud adoption, and so many other things. So it is, and from that standpoint, I think Kalshi, at the center of a lot of that innovation, is a really exciting place, and I'm super excited to be joining at this part of the journey with them.
So Udesh, many people know Kalshi for event contracts, betting on the likelihood of, let's say, a FIFA game and who's going to be the World Cup winner at the end of this week. But you've launched a number of new products outside of event contracts. Can you talk about some of the recent initiatives and why you're moving away from or adding to event contracts?
Yeah, that's a great question. I think as we have seen, event contracts or prediction markets are becoming quite mainstream for a few reasons. One is the predictive power that they provide, the very specific questions that they ask, which help the institutions, retail, and other participants manage risk. And today we are at Kalshi. We have about a very large set of institutional and direct retail participants who are able to do so. And with that in mind, we have seen a fairly large growth in some of the very important asset classes, such as crypto, such as KPI markets. And now I'm excited to talk today about the compute market, which is GPU related, that we are excited to also bring into the marketplace for risk management and other needs.
And we want to dig into this. Just two quick questions. Is BlackRock involved?
Right now, at this point in time, this is something that we have done organically. We do have pricing information that comes from one of our partner vendors that's available on our website. But we do expect large institutions to take advantage of this innovation by you looking at the forward curves and use it to price deals, to do OTC contracts, to do other sorts of derivatives for their purposes.
And I know it's early. Are people calling you already because they're interested in terms of various institutions or institutional investors?
Yes, we are. We are getting a lot of inbounds because we are filling a void in this marketplace, which was very important. If you're Bloomberg, for example, is very big in the swaps market, as you know, for pricing interest rate swaps or any other derivative or any other deal that depends. Forward curve is very important. It is extremely valuable for anybody doing a 5-year swap or a 2-year swap to know what would be the rate on a particular index out there. Right? And that's precisely what we have done. We know that eventually this market is going to become quite large. Some estimates of the total addressable market size are in trillions. If you look at the amount of funding committed by the hyperscalers, they are north of 500 to 600 billion just for 2026. And if you look at multiples beyond that, what this market could be, it's a very large market. So we are getting a lot of inbound, but we do want to start first with a natural requirement, which is to bring price discovery in the marketplace so that it can be used for hedging, trading, and other purposes down the line.
So CME Group said back in May that it would launch computing power futures linked to an index compiled by Silicon Data, Intercontinental Exchange. It owns the New York Stock Exchange. And I'm reading right from Kat's article here. Teaming up with the financial infrastructure firm Orn to add futures contracts for computing power. Why are you better positioned to build this tool than they are?
I think I would start by saying that by such CME and ICE and others, it actually lends a lot of credence to the marketplace, to the demand for this asset class, in addition to what Larry Fink said earlier. But prediction markets are unique for a few reasons. One, the compute or the GPU market is not standardized at this point in time. there are many different factors that play into that index. It could be locations, the chips, the different kinds of chips, the grades, the different uses. So rather than focusing on a particular index or a particular contract, the prediction market allows us to list several of these contracts, which is what we have done. And the prediction market also ensures very robust price discovery at much lower levels of total open interest that we have seen through many of other contracts. So this is where it is very uniquely positioned to bring in a more accurate price discovery than focusing on one or two different grades of the marketplace and do a traditional future.
So
eventually,
Udesh,
sorry, go ahead.
You're mentioning an issue that has been raised in terms of this is a nascent asset class. It is a market that is evolving. We have a number of exchanges, as Tim mentions, that have gotten into the compute market and trying to develop it. Why is this price discovery that you're talking about, do you find it to be a more accurate indicator of where compute prices are at this moment, and then with this forward curve where they are indicated at a future point in time?
Yeah, I think one of the unique aspects of our price discovery that it's market driven. There are some forward curves out there, but they are derived not out of market inputs, but through either OTC deals or other bilateral contracts. But ours is a true market driven, and that is where the power of the wisdom of the crowd of the marketplace and the accuracy that comes out of it comes to full form, and that's why it's unique and the first in its category.
And who do you see as your core users for this product?
We do expect to see a variety of users. I think on one side, you have the natural sellers of compute, hyperscalers. You can have the neocloud providers. On the other side, there are the users of compute, AI inference companies, medical research companies coming up with which have significant computing needs to do drugs research, retail, many of which were interested or are speculators in the marketplace. So we do feel this, just like many other commodities, to have a breadth of producers or suppliers and demand that will propel this ecosystem or the marketplace.
Udesh, I want to try to understand some of the nuance in this and how you account for the nuance. Maybe it's algorithmically. I'm just curious from you. In this release, Tarek Mansour, the company's founder, CEO, says that compute is the new oil. Compute futures will eventually dwarf oil futures. Oil, though, is fungible. It's a barrel of Brent is a barrel of Brent. It kind of doesn't matter. An hour, though, on an H200 is not the same as an hour on a B200. Chips depreciate. New architecture arrives every 12 to 18 months. Pricing power shifts. How do you build a reliable forward curve on a commodity that kind of like as soon as, it's like a new car, it becomes obsolete or it depreciates, as soon as you drive it off the lot?
And that's a very, very important point that you make, Tim. I think, as I mentioned earlier, this marketplace is still finding its footing. There are several grades, there are several different tenors, several different other categories that give the appearance that it is quite dispersed. I would like to say that even in the oil market, there are many different grades. There is the WTI Cushing grade, there is the WTI, but there are various forms of WTI. But the marketplace has gravitated and formed a representative index, which is good for the market, and then there are basis products that derive. So we expect the marketplace to gravitate towards that, and the prediction markets and our forward curve to be a good enabler, so that markets, our users, can see the price on different grades of GPU compute at different tenors, and then the market will most likely gravitate towards a limited set of usable indices, and then there will be basis products adjacent to those indices, just like WTI and Brent have.
We're speaking with Udesh Jha, Chief Risk Officer of the prediction market platform Kalshi, joining us from London. It's a Bloomberg exclusive. Kat Doherty from Bloomberg News is also here.
Udesh, I wanted to ask, so we have this forward product that you have just released, but the intention moving forward, could you and do you plan to release other products that are investable products on top of this forward curve?
Yes, I think the forward curve is sort of your foundation to do other products, such as futures, such as swaps, such as any other derivatives. So we'll see where the demand takes us. But I think our focus in the very immediate term is to build liquidity on the markets that are driving this forward curve, so that this becomes the anchor or the benchmark for the industry.
So one of the things I'm curious about is, and follow me for a second if you get, like, who actually trades this in the first year? And I bring it up because the buyers who need it this most, we're talking about the AI startups using millions of compute for training, right? There's that, are also the ones least able to post margin and kind of manage derivatives risk. The sellers, the hyperscalers, whether it's AWS, whether it's Google Cloud, they have already in many ways locked in capacity through those long-term contracts. We talk about it a lot here at Bloomberg. They have no obvious incentive to essentially give up some of that pricing power to an exchange. So, Udesh, who do you see as using this in the first year, if you will? And what happens if liquidity is too thin, so thin to produce a meaningful price signal, which is so important to really a truly functional marketplace?
Yeah, I think you're very right. I think there is a lot of capacity that the hyperscalers have already committed to, but we are also seeing an astronomical speed at which the demand is growing over the last 6 months, or even a year if you look back. The adoption of compute that are heavily dependent on AI and others have been growing on quite. So there are going to be quite a few on the demand side that will emerge, whether it's financial institutions or drug research institutions or neoclouds lending them. So we do expect, and then retail, of course, for an asset class which is as exciting and potentially volatile. I think we will see retail and other speculative power come in as well. And I do expect hyperscalers to, at some point in time, do look at this market as well.
Udesh, I want to bring it back to your experience at CME. You've launched this forward curve. You're planning to launch other products off of it, other derivatives. What gives Kalshi the right to compete with the incumbents in an industry that you have many traditional institutional players in the market that are used to going to a CME or an ICE? And you have a newer player like Kalshi coming in with new products. How do you plan to stand up against the incumbents?
I think one of the biggest strengths of Kalshi, and this is one of the reasons why I joined Kalshi after 16 years at CME Group, was the importance that Tariq and Luana put on risk management and doing it the right way. If you remember, Kalshi waited for 4 years waiting for regulatory approval to just launch a product. Recently, we launched perpetual futures. We worked for 18, 19 months to launch it. So I think the risk first is and adopting of technology is one of the reasons why Kalshi, I feel very confident that we have the right to win in this marketplace.
It makes me think too of and Kat hit on this, and she hits on this in her Bloomberg News piece as well, the evolution of the platform. It's known for being a prediction market, and Bloomberg Intelligence, our in-house group of analysts here, had a report earlier this year that said the vast majority of what happens on prediction markets, including Kalshi, is still sports gambling. What are some benchmarks that you're using internally right now to make sure you diversify what is actually happening on the platform, so you move away from just concentration risk?
Yeah, I think if you look at the growth, I think everything is growing. So obviously, with the events in the sports, with World Cup and others, it is hard to focus on something that's not World Cup. But if you look at the growth in our marketplace, which are true risk management products, whether it's weather markets, whether it's KPI markets, whether it's people wanting to have a prediction market on a Fed raising or keeping rates on, I think a lot of them are growing. I think, and we are also starting to see institutions come and join our platform. So overall, I think the whole pie is growing quite comfortably where we would like it to be, even though some of the recent World Cup and other events give the impression that the market share is still very high on sports.
Udesh, I want to end where we kind of started, and we talked about your background. 16 years at CME, MD running post-trade services. CME is suing the CFTC to block Kalshi's perpetual futures. So you come from a company that's trying to shut down the company you just joined. It's kind of interesting, the dynamics. I'm curious, should CME be worried at their former risk head who knows clearing and settlement infrastructure, who now works for a competitor?
Well, I wouldn't want to speak on CME's behalf, but what I want to talk about the perpetuals is the perpetual futures that we have launched are very different than what the way perpetuals trade offshore. So I think, and they are very much like any other future that CME or others trade. So I think to answer your question, again, I'm not going to speak on CME's behalf, but I'm quite excited to be in a place where we launched the first true perpetuals in a regulated exchange using the proper risk management tools. And now the first exchange to be doing a compute forward curve, which will benefit the broader industry.
Have you had conversations with your regulators about perpetuals and your plans moving forward to, I assume, launch many more outside of crypto assets?
We always have conversations with our regulators on different products and asset classes. So the answer is yes, we follow the regulatory process which is quite robust from a CFTC standpoint in terms of how they look at our products, the risk management, the data before we launch anything that is on our platform.